Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It's great to be back. I was away for a week or so visiting traders from around Eastern Europe, and it's awesome to see guys using technical analysis, trying to figure out a process, figure out a routine so they could be involved in the market for multiple years. And I want to thank you for taking the time if you did come meet, and all in all, let's move forward. So here we are, back from around the world, sitting at the desk where I have very comfortable and I live. So anyway, today was similar to some of the other moves that we've had, where we've had a series of misdirectional kind of distribution days, which to me I think is a little troublesome. I know over the weekend everybody was talking about the head and shoulders top in the S&P. So the market likes to not make things easy. So what did it do yesterday? It gapped up and probably squeezed out anyone who was short. Maybe baited in some longs, and then today, we opened down 4 or 5 handles, and my plan was, can we hold half of yesterday to show some commitment versus just giving it all back like we've seen, and all of a sudden, after an hour or two of trading and getting that morning low to trade against, it broke in the afternoon, created a fast move, and for now we held that support. So not easy trading whatsoever. Even with a lot of names that are starting to falter too. So anyway, you look at the chart here of the S&P, and lots of tradable patterns. From the double bottom low to the quick move up to right here when the market reclaimed the 8 and 21-day moving average, took out resistance, and then trended above the 8 and 21-day pretty much since. We then broke this ascending channel. We've been on the right side. We talked about when it came down here the first time, can we build a right shoulder? And now it seems as if this right shoulder is bigger as far as the amount of time spent. So can this left shoulder head distribution pattern now be complete to break below the neckline? We shall see. All I know is you had here you had a breakout day that failed. Then you came in, everyone thought short. Rally back to rally down. It's not easy, but typically this to me is not bullish action. My thesis I always talk to you guys about is when we're above the 8 and 21-day moving average, try and have risk on, look for leaders. Right here, it looked like it was going to break, and it didn't. And now we've been on the right side of this ascending channel with some more technical damage, in my opinion. So here we are now below. We're curling lower. So at least I think I don't care if we gap up. Today's not a day to be buying into the support. All right, if you feel comfortable being short overnight and you think this pattern triggers, you probably have to be at least tier 1 short. And then if we opened up a little bit, maybe you add for what could be a decent move to the downside. You have the 200-day right here, and the measured move of this is about 50 points. So 50 points takes you down to this 1990. So we'll see if this happens. I am short a little bit. Actually, for me, I'm short a little bit more. Tomorrow, if we gap up, what I'll be doing is the same thing today. I will show you where the halfway point is, from yesterday, which is probably around 2060, and I'll say, hey, I think the right thing to do was to go home short just in case we had downside follow through. But we're up we're up 6, 7 handles. If we get back above this spot, I'll have to cover because it is what it is. If we open up 4 or 5 handles and basically you could go red, from green to red and take this out intraday, maybe you could add and then finally get some kind of resolution there. But we shall see. You look at some other sectors and you look at the Russell. It to me is starting to look a little bit more troublesome, right? Took back the 200-day here, now back below it and closed below every moving average. Do we fall apart? No. Does this look a little bit like a head and shoulders top pattern? Yes, also. I'm short some of the IWM as well, just in case. Here was when it broke the right side of this channel. It's on the, the ascending channel. It's been living on the right side, below all the moving averages. This was your easier trend to the upside, above the moving averages. And now you have to at least just be careful. If you don't want to be short, that's fine. But to me, you cannot be long here except for a small little tactical spot. And that tends to even change a lot intraday. The XLE was stronger, still acts fine. It's not at the highs of the previous few months like oil, which still looks strong, but at this point it doesn't seem like we're as correlated to oil. We were very correlated when oil was breaking down because of all the potential defaults, to this, to that. now that I think they want to try and get it near 50, we shall see. It's a little extended from the 8-day. There's been some tradable patterns there, but at this point I would not be chasing oil even if it wants to continue, and we'll see how that affects the market. So yesterday I was flying home. I land around 2:30 and I see the Dow up 150 points. I'm like, oh, I missed a few stocks that probably been acting well. Where's Facebook? And Facebook was down $1.40. I'm like, ooh, that's a weird divergence. At least that happened yesterday. So then today, you didn't get stuck. And now something like Facebook, we'll see what happens here. Okay, Facebook now couldn't break out. Okay, I remember last week I was trying, and now it's below the 8-day, and we'll see how it handles this gap. If the market wants to get really weak, this might trade into it. So at this point, I think momentum traders should be very careful here. It showed some relative weakness yesterday, had some downside follow through today. Now we'll see what happens here. Amazon, ever since Donald Trump said antitrust issues, I remember, guys trying to short it. And here was your doji up here, and now, basically it's testing the 8-day. And you also have this gap here. If Amazon's any good, you probably want to see it hold this. Maybe we'll figure out what happens around this pivot here tomorrow, which is 696-ish. It's pretty important. The 21-day is a lot lower, and then gap support is all the way down here. So we'll see what happens. So this also losing a little momentum. Google started up in green and wound up having a day where it couldn't hold yesterday's high, and doesn't look anything special. Apple, which had the Buffett news yesterday, basically took back that 92, was up 90 cents this morning. If you were long, looking for follow through, that's why we always sell a portion pre-market just in case. And then when it went red, you could have got out and said, let me wait. And now Apple, we'll see what happens here next. Now Apple gave some guys a nice trade when it went below this key support of 92, but just like everything else, as soon as you hear everyone and their grandmother talking about a key level, sometimes you get a misdirectional move. So you had a decent day trade last week, but if you stayed too long, you got a little hurt. And then this was your spot to switch, and now we'll see whether or not this holds a little bit for more action. But as of right now, decent, better short today than a long, and yesterday was a better long than short. So that's what people are looking for now, like day and a quarter, day and a half moves, if that, while we try and figure out what's next. What else? VRX was strong today, but you're talking about a stock that's been absolutely annihilated. So for a day trade, yes, was it strong, but I guess it was something to do. That was one of the few things that made me money also, but I didn't go home long it. So lastly, metals, the GLD still looks pretty good. Okay, little inside day to the upside. Last time it broke out above this, wasn't really ready. Now it's holding again, so as long as this holds, maybe if the market does pull in, there could be another move here in the GLD. I'm still in my call spread, but remember we talked about buying the 120s here, sold the 124, so it's a free play. It expires Friday. We'll figure out if there's something else to do here as well. The gold miners, the GDX, let's see what that looks like. Still looks good. Above the 21-day, here's some better trends. This is a decent looking trend, and then you go to look at the Qs, see what kind of trend it has, and not quite the same. And now it's back below the 200-day. Today we closed below yesterday's low. Not saying it's going to fall apart, but that's something that tells me to have risk down. Even if we gap up tomorrow and you feel like you're missing along, it's not the right thing to do. If you're looking for a continuation short, it's something that hasn't happened, but maybe it does. And part of my media rule is, every time you start hearing about something more than 3 times an hour, like everyone talking about, oh, yesterday we were up, today we're down, today we're up, tomorrow we're down, and the market's going nowhere, we're in this range, and typically by that point, the trade has to change again. And as of today, it looks like maybe to the downside. And yesterday it looked to the upside. So either you could also be flat, because there's more than enough moves to happen on a 5 to 15-minute basis if that's what you trade. So today, I go out net short the spiders and IWM. We'll see what happens. Hopefully, we get some kind of continuation tomorrow. If we gap up tomorrow, hopefully it's not too big where, it tries to take back a third of today's move and you can fade that to go red and press through the level, or we gap down. But if we gap up and trade back above 2060, a lot of the same with, I think, underlying technical damage, which is, showing its face, pretty loudly. But we'll see what that means as we move forward. Have a great night. Good to be back. I'll see you at the morning call tomorrow.